Hey, I have a question about international funds. You had a caller just talked about an international fund, but you've been mentioning the ability to invest in the Israel fund, and I was looking at the Israel funds, and you've got Class A, B, and C, or no A, B, and I, something no A, C, I, something like that.
Mm-hmm.
Anyway, can you talk a little bit about the different classes of that Israel fund and what you think might be the best approach? And
Okay.
I'm in the
Sure.
Timothy 65 and over.
Gotcha. So the difference between the A, C, and I shares has to do with the cost structure only. And this is not just for the Timothy fund. This is for most funds out there, not no load funds because they don't have different share classes. But any mutual fund that you might get into, you're going to have to make a decision to buy A. There used to be B shares; those have kind of gone by the wayside now, and even C shares are starting to go away a little bit. And then there's I shares. So an I share can only be bought in an institutional or managed account. So if you have a self-directed brokerage at a discount brokerage or something like that, you're not, unless you're paying a fee to a manager to manage your account, you're not going to have access to the iShares. That's going to leave you a choice between A shares and C shares. So an A share is what is called a front-loaded fund. You're going to pay an upfront sales charge to get into that fund, whether it's the Israel fund or any other A share. Typically, I mean, then the prices can range, but typically the upfront sales charge is going to range anywhere from 0 to 5.5%. And they offer discounts based on how much money you're putting in that fund family. So let's say that you have $100,000 going into the Timothy plan. Not all of that's going into Israel, but maybe it's going into different places. Well, you can combine all of that together and you can get a discount. Instead of paying 5.5, you pay 3.5. So the internal expenses, and that's how the fund manager gets paid. That can include some 12b-1 fees on how advisors get trailing service fees and any other things that make up the operating expenses are lower in an A share than a C share. A C share you don't pay to go in up front, but the internal expenses are higher. Over the long run, it's going to be cheaper in an A share. So that's kind of the bottom line on that, and that's where I would go with that.